Okay, so hello everyone. Today what we're going to be doing is part 2 of the crude oil trade video that I put out. So basically what we've done recently is put out one of our biggest trading plans for 2018. So if you haven't watched part 1 of the video, just quickly going to throw it up for you right now. You can see here the big trade for 2018 US crude oil trade idea. Now that video, what I do is I walk through all of the technical based aspects of that specific trade. What we're going to be doing today is talking to you about the fundamental aspects, so the really important fundamental aspects about this trade that is going to help you make a great deal of profit from this. Now once again everyone, I just wanted to give you a disclaimer up front. This is just for educational purposes. This is just for you to learn a bit more about my processes, how I execute trades and how I'm able to be so profitable in the financial markets. My specialty is trading crude oil. I've traded this a lot and I know what I'm talking about within reason. So what I'd like you to do is take notes, learn more about it, ask some questions because I'm always here to help out. But once again, keep this to your own discretion. Make sure that if you do risk any money in the financial markets and trading, it's your own decision and no one has influenced that decision on your behalf. Once again, just to introduce myself to you, my name is Morgan. I'm the founder of MS Equities Trading. I run an investment research group. I run an educational group that trains students in 25 countries around the world. And I also focus as being a proprietary trader. I manage funds for clients based around the world as well. So basically what you're going to see is an approach coming from myself as a trader. I trade what I teach. I also trade these plans. So this plan is going to be a plan that I'm going to be trading a massive amount. Let's just jump into it now though. So basically, I'm probably going to be a little bit rundown on this video. You're going to see we're sitting on New Year's Day right now. It's been the first day of the year. I had a really busy day, so we're doing this quite late. So what's going to be happening is the third video, which is going to be my opinion over this trading plan, the risk management aspects and also the big entry points that you'll be able to use for this trade is going to be in video number 3 coming out tomorrow. Really working as hard as I can to get this stuff out. I've worked the whole way through the holiday. I have only taken 2 days off in the month of December. So yeah, it has been very long and lots of work on this plan. So please make sure if any of you need this plan, get in contact with my team, info@msequitiestrading.com. Ask for the trading plan, the US crude oil shorting plan, and one of my coaches will get in contact with you, send you the plan, and make sure that if you need any assistance, let us know. We'll make sure to help you out. Once again, make sure to subscribe in the bottom right-hand corner. There's a little square you can click on it, click subscribe. What that'll do is keep you updated on all the latest content we're bringing out. We try and keep up with 4 video uploads a week on educational content about trading, investing, wealth management. Sure, you'll find a lot of really interesting things to learn from. So let's jump into this trading plan. So basically, in terms of this trading plan, what we have been looking at is, I'm just going to run over the first few pieces. The first few pages is what we looked at in video number 1. There's a lot of information about exactly why I've chosen this trade from the technical aspects, but the biggest part about this, this trade is going to actually be the fundamental aspects. So we finished all the way to the bottom here, but now the big one is the fundamental data and news. So basically what I'm going to do is this news is not really in chronological order, but towards the end it actually is. So this information you're going to see, I'm going to jump back and forth. But basically, basically trading crude oil is a very fundamentally driven and macroeconomic driven asset class to trade. It's not really where you can just apply technicals and expect that they're going to work all the time. It's really a heavily fundamentally driven asset class. And that's also what you need to focus on. In terms of finding your data, you really need to find serious amounts of data, and one by one you're going to lay your information on top of each other and come up with a opinion and also almost a bit of a rounded judgment of where you think the general trend of the news is going towards. So what you're going to see focusing on all of these articles that we're going to be reading through is specifically focusing on US crude and focusing on how all of the articles are keeping a general trend, talking about the increase in production in US crude production and specifically relating to shale. Now, shale technology is a very, very low-cost way, a much lower-cost way to be able to produce oil at a really good price and also get a lot of volume out of the ground every single day. Obviously, this makes life a lot easier for US producers to get oil out of the ground and get it moving to the consumer. So what you've basically got is you have got supply, which is obviously going to come from these guys, the producers, and you've got demand, which is coming from the consumers. Now, between supply and demand, we're not really seeing too much about demand. People are focusing majority of their time on how much the supply is going up, and that's a massive one because obviously US crude, we want to short it, so we want a surplus in supply, a surplus in oversupply and storages, and a drop off in demand or an oversupply into demand, which creates a competitive marketplace which pulls the price of oil down. So basically, going into one of the first articles I'm going to read you through is from Reuters. So what you're going to see on this first article coming out, so you can see over here, we've got the fundamental data and news. So basically what happened in December is there was two major points that spiked the price of oil very, very close and then just above $60 a barrel. Number one was the North Sea pipeline shutdown. Now the North Sea pipeline provides a massive amount of Brent crude to the European regions and to a lot of the British regions. Now, what obviously happened there is the North Sea pipeline shut down. It had to be shut down for maintenance and a few other things. And there was also, I think there was actually also a big breakage that they experienced. So they shut the pipeline down. They've started to get it back up and running very slowly, but it's really not pumping enough into the regions that they needed. Slowly but surely, they're going to get that pipeline back up and running full speed going into January. And this is going to be a big opportunity for the oil prices to see a massive pull down because there's going to be that supply coming back online. Another one is the Libyan pipeline was bombed in mid to late December. So what actually happened was there's been massive conflict amongst the rebels in Libya and Central North Africa. And what actually happened was one of the rebels, they've been threatening for a while to bomb one of the pipelines in Libya. They went for it, they bombed the pipeline, they were very successful at it, and now that pipeline's completely shut down. So the supply coming out of Libya and Central North Africa, one of the biggest pipelines, is now shut down. That is also going to be coming back online in January. So you're going to see a massive surplus coming from that area. So this article from Reuters is talking specifically about how US crude oil soared towards $60 a barrel since mid-2015. Now, as you're going to see in the technicals video, the $60 level is a very important level. So you're going to see there's a lot of information. I'm not going to talk through it because there is way too much to cover in this video, but please make sure to read through it closely. The next one is going to be the Baker Hughes oil rig count numbers. So basically, Baker Hughes counts all the oil rigs around the US production area throughout the year. So they're counting every single year, or sorry, they're counting every single week, and they're bringing out their numbers every Friday. So the Baker Hughes oil rig count number, it helps us a huge amount to understand more about how much production is increasing and how much we are expecting to come out of the ground going into 2018. Now, big thing you need to understand about fundamentals is the producers always know what we do not. They are there, they are pulling the oil out of the ground, they are drilling for it. They have incredible researchers, they have incredible teams of analysts that are going through this information, understanding what's going to happen in the future. And the Baker Hughes oil rig count number allows us to predict what they think they know. And what you're going to see is something pretty interesting. So basically, these numbers are coming from 2015 to date, and what I basically said here is, as seen below, oil rig count numbers have massively increased from 2016 to 2017. There's little translating into the pricing of oil. Oil prices continue to rise, although US drillers are producing more oil than in the last 4 years to date. This is a very strong indicator of divergent statistics, which creates an obvious possibility of a massive oversupply in the US market whenever US suppliers feel it is necessary. So a big part of this is that the US suppliers are in control of supply. They have the rigs to be able to drill for the demand, and they are able to turn those rigs on whenever they want it. So they don't have to bring new rigs in, they already are drilling for it. So what you can see here is that in 2015, end of December, the rig count was 536. 2016, December 30th, the last one of the year, rig numbers were 525. That was down by 16 rigs, and you can see the oil price went up to $53 a barrel from $36 a barrel in 2015. You can see again in December 2017, oil rig counts have gone up to 747, the highest to date. Over 222 rigs added in the last 12 months. And you can see the US crude price is still continuing to rise. So this doesn't make sense. Rigs are rising, meaning production is rising, but prices are still rising. And that is the competition that OPEC has brought into the arena this year. OPEC has obviously been trying to pull those numbers down as much as they possibly could. And that's where you can see US oil suppliers trying to cover that loss that they are having in the market. US suppliers don't have to obey what OPEC regulations are trying to put in place. They're trying to put production cuts in place, and US shale producers are just pushing as much oil out as they can. Please remember the rigs and what I just talked about. It's going to be a lot more information coming up. So the big one is going to be, make sure to look on the Baker Hughes website. You're going to see a lot of media, a lot of articles coming up. Please make sure to keep an eye on it. Another one are these two graphics here that I actually uploaded onto Twitter. Also, for any of you who would like to actually see my Twitter page and actually keep updated, then make sure to follow Morgan Sampson on Twitter. That's my own Twitter page, and what you'll see is on a daily and weekly basis, I'm uploading data, trading plans, fundamental news, statistical data, constantly about everything to do with trading, forex, currencies, commodities, indices, all those sorts of things. So if you want to keep updated weekly on news coming out, on new videos coming out, make sure to follow me on Twitter. That will make sure to help you out a lot more as well. But as you can see here, this is export from US crude in millions of barrels between 2016 and 2017. Now, if you look very closely here, you can see that there is a massive increase in the eastern region, the Asian region. Have a look at China. China goes from $8.3 million barrels in exports from the US to 63 million barrels in 2017. Massive increase. Canada fell off just a little bit, but what you can see, South America rose quite a bit. South America actually rose very well. You can see the Netherlands and areas in those places dropped off slightly. The UK rose from 5.9 million barrels to 24.4 million barrels. That is a massive increase. France rose to 8.6 million barrels. Spain rose, Italy rose. And then you can see in the eastern regions, you can see a massive increase. So Thailand nearly doubled. India rose slightly. You can also see Japan rose relatively well. South Korea rose over double, close to 3 times. But as you can see, the major one is China, rising from 8.3 million barrels to 63 million barrels. And we are expecting that US suppliers, US exporters are going to be increasing their exports out to China in 2018. Supposedly, from what we understand, there could be a massive increase. So that number to China and to the eastern region could increase even more. And obviously, it's going to be massive competition between the Saudi regions and between Russia to see who gets Chinese business. But because US crude is producing at a much lower cost than Brent crude, well, whoever gets the cheaper price gets the business. And the thing is that the US is holding the cheaper price right now. So that's also a big one that we would have to consider. Make sure to also have a look at this one, the Texas shale producers. So Texas shale producers are expected to raise producing by nearly 800,000 barrels per day. Pipeline projects to move out of Texas, to move oil out of Texas will only be completed in 2019. However, any current production will be shipped via freight at a slightly higher cost until such point. Shale production rising into the whole of 2019 consistently, and into the whole of 2019 and consistently rising, which will not only create additional risk to oversupply, but it's also going to create a possible competition with pricing. So make sure to read that article as well. That is a really, really nice article. You're going to see a lot of information from this. What I'm going to do is list up these articles in the video description below, but then also if you need the trading plan, make sure to ask me for the trading plan. Just email info@msecurities.trading.com, email down below as well, and we'll send it through to you. So you can see that's going to be a massive thing. So Texas shale drillers are basically increasing by nearly up to 800,000 barrels per day. And now this is in Texas alone. Now, given Texas is a massive producer, you've also got the Gulf of Mexico, that's a massive producer. You're going to see that when those barrels start hitting the supply lines, that is going to be a massive increase in production. Now, they will use means like exporting by freight if they don't have the pipelines ready yet. Now, exporting by freight is artificial means of export, but what they're going to do is they're going to export it as close as they can. You know, Texas being close towards the sea, they're going to export as close as they can to the nearest harbor, and they're going to get it on the boat and get it out. Now, whatever that cost is involved, it obviously weighs heavily on whatever their margins are going to be. Given that the oil price is high right now, they can afford to ship via freight and not even use that pipeline and still get those barrels out. So that's a big one, is the threat from Texas is going to be massive on the oil price, which is obviously going to be an impact to see the price move lower. Make sure to also have a look at that article as well. You're going to see a lot of information from there. Another one is the US shale driller stats. So like I said, shale drilling is going to be a massive impact to 2018. You can see here I've just put up some points. Crude oil production from major shale regions is set to grow by 94,000 barrels per day in January alone. The Energy Information Administration forecast. So that is coming directly from EIA. That is some seriously reliable information that you can see. And you can see also here, total output from those regions seen topping 6.4 million barrels a day next month. So basically what you can see in this chart here is very interesting. So total oil production in the US, you can see, is in the lighter blue. You can see it's moved consistently in an uptrend, but it went through a slight dip in July during that time. But as you can see, the darker blue, there is just a consistent one-way increase. Month on month, shale production has gone up. And shale production will continue to increase, especially because of Texan shale producers hitting into the rest of next year. You're going to see the rest of the producers also try and increase, given that the price is nice and high for them. They can be competitive on exports as well. They've got the business out there, and they've got the price competition. So now they're going to be focusing on getting as much out there as possible. Make sure to read that CNBC article as well. Another one is also going to be US Shale and OPEC clashes in 2018. Just going to read this out for you. So these are three pieces I took from the article. US output surged overall this year, hitting a 46-year high in October. Don't forget that 46-year high in US output, when producers pumped 9.6 million barrels per day, according to federal data. The US expects production to top 10 million barrels per day in the coming year. So now that's what you can see. They already got their numbers together. They already know where they think they're going to go. You're probably going to see to cover that additional 400,000 barrels per day on average is probably going to come from shale producers producing oil at a cheaper price. The tug of war between OPEC and the US will continue to pressure oil from trading above $60 a barrel, said a member of the Seoul-based commodities analyst at Samsung Futures. Now, this is a very important comment to make because, like I said in the previous video, many analysts have called $60 as a very strong whole number resistance area. They feel that there is not enough demand for us to move way above that price. Artificial manipulation to these pricing is not going to be enough to try and prevent price from staying below. You know, OPEC wants pricing to move a lot higher, but the US drillers can be very competitive at $55 to $60 a barrel. So they don't mind the price moving slightly lower because they're still going to have good margins, they're still going to make money. So that's also a big one, is a lot of analysts are saying publicly that they feel prices are not going to move above $60 a barrel, which is also very important for us to understand that the general sentiment out there among US analysts are that we're not going to see an increase higher than $60 a barrel on average. So also another one is 2016, we saw an average of $52 a barrel on oil. So that's also going to be a big step that we need to consider, is that we're already moving to that limit and expecting it to pull back. So, averaging out next year, we might see the same amount, we might see less, we might see more, it just depends. Just to end that statement off, like we've seen this year, geopolitical risks will be the key factor going forward for oil to breach $60 a barrel. So what he's basically claiming there is that in terms of being able to push above that $60 a barrel, we're going to have to see something major. We're going to have to see some serious macroeconomic plays. Maybe something major coming out of something to do with OPEC, maybe something to do with unpredictable events like the weather events, maybe something to do with North Korea. But given that if we see into the first quarter and the second quarter of 2018, we don't have anything serious to warrant a spike in pricing, in oil pricing, we're going to see that price drop again. So that's also vital for us to consider, is that if we don't see that opportunity for volatility, we're not going to get those numbers. And that's also a big one, is we can't predict that. We can't see that coming. So that is a very difficult part. It's a bit of a loose built statement, because it doesn't give us much other than unpredictability. So to end off that piece, another possible risk for oil prices in the new year, President Donald Trump says, President Donald Trump's trade agenda. If Trump's protectionist rhetoric results in real trade barriers, this could boost the value of the US dollar, which would have an inverse effect on the oil price, according to Bill Grady's chief market strategist at Confluence Investment Management. So this is also very important to consider, is that if we're going to see a major strengthening in the US dollar, which we're expecting, given that they have already predicted 4 interest rate raises coming straight from the Federal Reserve. Janet Yellen has said they're expecting 4 interest rate raises going into 2018. We're going to see a possible stronger dollar throughout 2018, which could probably put a hit on oil, putting the price of oil down quite a bit. So another one is that if there is a bearish wild card out there, that's it. Grady said in a phone interview, that's one of the key risks to our business. So basically what he's just saying there is, if we see a very, very big opportunity for maybe an oversupply, a default and oversupply, something really goes wrong, maybe producers land up defaulting on certain export policies, if maybe Russia defaults on certain exports, if OPEC defaults, and you're going to see this massive push from US producers, you're going to slowly get an oversupply. They're either going to cover the supply deficit, or they're going to oversupply. And that just depends on what the pricing is at and what these companies are looking at doing. Another one is US crude hits world record numbers. So data released today from EIA, October largely confirms earlier predictions by Rystad Energy that US oil production could reach 10 million barrels per day at the end of 2017. They were very close. It hit 9.6 million barrels per day in December. US oil imports are shrinking to new lows, while oil exports are increasing. The petroleum trade deficit in the US at merely 2.5 million barrels per day when looking at all types of petroleum liquids. This deficit has fallen steeply from a peak of 12.5 million barrels per day in 2007. This is a vital aspect. So not only are exports rising to all-time record highs in the US, imports are reducing massively. And this is a big problem, because the US is a massive consumer of imports. So you've got countries from around the world that are producing massive amounts, and they're doing business with the US. Now, because of a lot of things to do with Trump's rhetoric in terms of trying to close off ties with cross-border business, try to focus on keeping the business inside the US, given that the US can now service that cheaper price, you're going to see that imports are going to pull down greatly. And now these countries out there are going to be left with an oversupply that they cannot move, because they can't consume that amount. So that's the problem, is not only are you going to see the US exporting at a much cheaper price, you're going to see competitive countries that can't move their supplies because their pricing is higher than the US's pricing. That obviously depends on macroeconomics and how they're moving the oil, what's the cost of transport, what's the margins, but that is an opportunity for us to watch, that we're possibly going to see a massive oversupply because the US is pushing a lot of exports out while servicing their imports at the same time. So they don't even need to have imports coming from other countries. That's also a very, very vital article to consider. And you can also see here the massive increase in oil production over the historic years. We're getting to those all-time highs on almost every playing field. And that's also important to consider, is that we're going into territory that no one necessarily considers is going to be where we'll be for a long period of time. But that's where we're going right now. That's where we're going for 2018, and that's a surplus in supply, and the price is not reflecting that. The price still continues to rise. It's a complete divergence. You're going to see that the price is going to pull back. The supply is not going to cut off immediately. These guys know they probably are good to drill for at least the next 6 to 10 years going straight. I mean, there's a prediction that over the next 10 years, the US is going to rise as being a key oil producer in the industry, beating Saudi production and Russian production. That is massive to consider. So there's massive investments going to US production right now to make sure that they can be on top within the next 5 to 10 years. Now, what you're going to see is that is the end of this video. I've talked myself out here. You need to take some time to go and read through all of these articles. They're really, really nice articles. Like I said, I'm going to link them down below in the description. But please, like I said to you, you need to make sure you study this information. Trading is a very, very difficult practice, but the thing is that the more you know, the better you do. The better you do, the more you make. Once again, everyone, thank you so much for tuning into this video. If you need any assistance, make sure to email us info@msequitiestrading.com. One of my coaches will make sure to get in contact with you and help you out. Once again, everyone, new video coming out tomorrow, the risk management processes and my personal opinion about this trade. I'll see you in the next video. Cheers for now.